Hello everyone. In this video, we will talk about one of the best accurate strategies that allow you to trade easily and seize the best entry opportunities using the golden levels. In this video, we will start from the beginning, using filters and screeners, until we reach setting targets and stop loss. This strategy can be used on several frames, from 15 minutes to 1 day, but in this video, let it be on 1 hour frame. Well, when the market is in an uptrend, we should not look for short positions or wait for a drop. Instead, we should look for corrections, which are usually the best points to catch up with the uptrend movement. As we can see here, the trend is generally moving upwards, but with this, we find some minor pullbacks, and these pullbacks are called corrections. But the question remains, where will the next correction be? Will it be here, or maybe here? Well, to find out, let's head to screeners. From this small arrow here, you can choose the market you want. You can choose Forex, stocks, or even crypto. Then, you can drag this section up from here. Also, you can enlarge it from here. Now we are in the filters and screeners section, and the first thing we do here is to make sure that the time frame is the same as the chart frame, which is 1 hour. After that, we click on the filters from this button here. Now the first thing we do is to choose the trading platforms that we trade on. For example, let's choose the Bybit platform, and also let's choose Binance. Well, you can search for any platform you are trading on from this list. Second, we will search for the exponential moving average by typing EMA in the search box. As you can see, there are many moving averages here, but all we want is this one, which is the 50 moving average. Click on the small arrow next to it and choose Above. Then, to Value, and choose the 100 simple moving average. Now that we've selected the platform filter and the moving average filter, let's move on to the third filter. In the search field, type negative directional. And 2 filters will appear. Well, any one of them can be used, but let's use this one, especially since we explained it before. Here we choose cross up. As for here, we choose positive directional. Now that we have our filters in place, let's see the results. Here we see a list of all the pairs that we have filtered, and to increase their filtering more, we can type the currency we want. For example, we can search for the pairs of Bitcoin, Ethereum, or anything else. But in this example, let's look for the Tether pairs. Now, as you can see, only currencies against USD Tether have appeared. You can choose any one, but always start with the currencies you know. Well, after choosing the currency you want, hide this section from here, so that we can return to the chart. Here we see a red bearish candle, which is the result of the negative directional filter. As for here, we see an uptrend, which is a result of the EMA filter that we applied. To understand more, let's apply the EMA indicator to the chart, so we can see how the filter works. The white line we see here is the 50 moving average, while the red line is the 100 moving average. And when the EMA 50 is above the 100 line, it often means that the trend is in an upward direction. As for this bearish candle, it's as we said, it is the result of using the second filter, which is the negative directional filter. And all that remains is to try to find some corrections, like the ones here. Now that we understand how these filters work, let's start by applying Fibonacci levels to see how to use it. First, we choose the Fibonacci tool from here. Secondly, we reduce the size of the chart so that we can see the lowest level that the candles reached in the previous period, between a week to a month. Clearly, this area here is the most low area, so we will start placing Fibonacci levels from here. And without any complication, we start from the lowest price, then we go up until we touch the highest price on the chart. Now let's zoom in on the chart so we can see it clear. Well, here we see many Fibonacci levels, but what we care about is this level, which we see it here in green. This level is the best level in Fibonacci retracement lines, some call it the golden level, and also the profit line. And its number is 0.618. Here we see that this level works well even in the previous periods, when it acted as a price retracement line. And even if we connect a horizontal line from this level to previous areas, we will see that it was working well. Yes, because it's Fibonacci 0.618, which never misses. Now that we have placed Fibonacci on the chart, let us draw another thing, which is the uptrend line. We take the trend tool from here, then we start drawing the uptrend, taking into account not placing it on the candles, but always below them. Now to the important thing in this video, which is the crossover that occurred between the trend line and the Fibonacci golden level. Here we see an intersection between the trend line and the green Fibonacci level, so if the price falls to this area, slightly above or below it, this means that it has reached the entry point. And from this point on, a rebound will be inevitable in most trades. Well, let's take another example, so we understand more. We go back to the screener and choose another currency. And let this be the one here. First, we zoom out the chart a little. Secondly, we start drawing Fibonacci from the lowest level and head to the highest level. Third, we draw the uptrend line as we learned in previous videos. Finally, we determine the intersection between the green Fibonacci line and the trend line, and near the level of this intersection, we will place entry orders. The first target will be at this level, and the second and third targets will be here, at the next levels. We can also take part of the profits here, at this level. As for the stop loss, it will be here, just below this line. Well, to see how entry points are placed, let's move to another chart. As we said, first, we set the Fibonacci levels from the lowest price to the highest price. Second, we search for the nearest uptrend that corresponds to the candlestick movement. Finally, we define entry points, targets, and stop loss. We place the stop loss just below this level. As for the targets, they can be taken one by one, according to the rest of the Fibonacci levels. Now the entry orders will be somewhere here, so it is preferable to place two buy orders. The first is on the trend line, and the other is on the Fibonacci level. As you can see, when the price reaches this area, it is likely to make a direct retracement, and this retracement is exactly what we are looking for since the beginning of the video. Also, if this rebound occurs, it will most likely reach this level, which is the level of the first target. Finally, thanks for watching, and don't forget to subscribe.